Q4 FY26 earnings call hosted by Motilal Oswal Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Tina Virmani from Motilal Oswal Financial Services. Thank you, and over to you, ma'am.
Yeah, thanks. Good evening, everyone. On behalf of Motilal Oswal Financial Services, we thank the management of Solar Industries to give us an opportunity to host the call. From the management team, we have Mr. Manish Nuwal, Managing Director and CEO, Mr. Suresh Menon, Executive Director, Mr. Milind Deshmukh, Executive Director, Mr. Monish Agarwal, Joint CFO, and Mrs. Shalini Mandhana, Joint CFO. Over to you, Mr. Manish, for your opening remarks, and after that, we will open the floor for Q&A.
Thank you, Tina. A very good evening to all our dear stakeholders and well-wishers. My name is Shalini, and I would like welcome you all to Solar Industries' fourth quarter and yearly conference call of FY26. This call's recording, including the transcript, will be available on the site. The financial statements, quarterly fact sheet, investor presentation, and press releases are all available on the website. To begin with, I would like to remind you all that during this call, we might make projections or other forward-looking statements regarding future events and about the future financial performance. Please remember that such statements are only predictions. Actual events or results may differ materially, and our website will be updated with all the relevant information from time to time. Now, I would request Solar's MD and CEO, Mr. Manish Nuwal, for his opening remarks on the company's performance, followed by Q&A session. Over to you, sir.
Dear esteemed investors, a very good evening. I, Manish Nuwal, Managing Director and CEO, welcomes you all to Solar Industries India Limited's earnings call for the fourth quarter and financial year ended 31st March 2026. We are happy to report that our company has delivered landmark performance, clocking its highest ever quarterly and annual sales of rupees 3,053 crores and 9,838 crores respectively, despite no growth in domestic mining markets. We have also achieved the highest ever quarterly EBITDA and PAT at 870 crores and 556 crores, registering a growth of 59% and 61% year-on-year, and highest ever quarterly EBITDA and PAT at 2,750 crores and 1,737 crores, registering a growth of 35% each in the year FY26. We achieved our EBITDA margins at around 28.5% for this quarter and 27.95% for the whole year. These numbers were propelled by strong sales from international and defense business, relentless focus on our high value chain products, and operational efficiencies. Dear investors, our defense business has nearly doubled, delivering outstanding growth with revenue surging 134% in Q4 and 94% for the full year to reach a record high of 1,008 crores and 2,634 crores respectively. A robust sales pipeline coupled with strong execution capabilities position us well to sustain this momentum, and we should cross defense revenue of rupees 4,500 crores in FY27. Solar's international business has performed very well, and as a result, we registered a growth of 32% year-on-year. Solar's ability in establishing strong relationship with its customers as a trusted partner underscores company's strength in identifying and capitalizing the global opportunities. Our recent expansions into northern and western parts of India, paired with upcoming plants in the east and south India as well, will definitely help us to strengthen our domestic footprints. This expected growth in domestic market is further complemented by our strong momentum in international business. Additionally, the defense vertical is steadily maturing into a powerful standalone platform, driving deep tech innovations, enabling significant future growth potentials. In FY26, we have delivered 30% revenue growth and surpassed our annual EBITDA guidance. This performance reinforces our confidence in the scalability of our business. Backed up by a strong order book of rupees 21,300 crores and robust opportunities across all verticals, we are targeting to achieve a revenue of 14,000 crores in FY27 while maintaining current margins. To support these growth plans, the company has invested 2,700 crores over the last 2 years and entering into FY27 with a planned annual capex of 2,050 crores. The company has proposed a dividend of rupees 11 per share for FY26-27, up from rupees 10 per share in the previous year, reflecting confidence in its financial health and commitment to the shareholders. I sincerely thank all our esteemed investors and analysts for joining us today. Thank you for your continued trust and partnership. Now I will hand over the system to my Shalini Mandana for presenting the financials in detail.
Thank you, sir. Coming to the results, we have shared the investor presentation carrying all the necessary information for a kind comparison. Key highlights for Q4 and for year FY26 are as sales. The consolidated revenue for the quarter is 3,053 crores versus 2,167 crores, and for the year it is 9,838 crores versus 7,540 crores. The percentages of the sector in the customer basket are as follows. CIL is down in the basket to 9% from 13%. Non-CIL and institutional is at 10% from 14%. Housing and infra is at 15% from 16% in the basket. International business is at 33% from 36%, and defense has massively increased to 33% from 20% and has crossed the four-figure mark, reaching 1,008 crores during the quarter. And in terms of percentage, it is up 134% year-on-year basis. In the year, the CIL in the basket is down to 9% from 13%. Non-CIL and institution is at 12% from 15%. Housing and infra is at 12% from 15% in the basket. International business is almost similar at 39% from 38%, and defense increased magnificently to 27% from 18%. And in number terms, it has almost doubled to 2,634 crores from 1,355 crores and up by 94%. Raw materials. Raw material consumption for the quarter stands at 1,522 crores versus 1,178 crores, and at the year it stands at 4,894 crores versus 3,979 crores. The employee cost for the quarter stands at 253 crores versus 174 crores, and for the year it stands at 845 crores versus 600 crores. The other expense for the quarter stands at 453 crores versus 275 crores, and for the year stands at 1,477 crores versus 1,001 crores. EBITDA. We reported highest EBITDA numbers for the quarter at 870 crores versus 546 crores. And for the year, the highest EBITDA stands at 2,750 crores versus 2,031 crores. The interest and finance cost stands at 41 crores versus 29 crores. And for the year, it stands at 134 crores versus 117 crores. Depreciation cost stands at 71 crores versus 50 crores for the quarter, and for the year it stands at 251 crores versus 182 crores. Profit before tax stands at 759 crores versus 464 crores, and for the year it is at 2,365 crores versus 1,739 crores. The highest ever quarterly PAT stands at 556 crores versus 346 crores, and for the year it stands at 1,737 crores versus 1,288 crores. These were the updates for the quarter and the year. This is all from my side, and now we would be happy to take any questions, comments, or suggestions that you may have. Over to you, Tina.
We can now open the floor for Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their telephone keypad. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Amit Dixit with Goldman Sachs. Please go ahead.
Hi. Good evening, everyone, and congratulations for a very robust set of numbers and indeed a very strong guidance. I have a couple of questions. The first one is on international business. Now, if you look at international business, the growth has been very good this year. Just wanted to get a sense on, the new geographies like Zimbabwe that we entered this year, and some of and what are the other key geographies we might be thinking. Also, what all geographies are we expecting more traction in this year, FY27? That is my first question, sir.
So thank you, Amit. You are very right that international business is doing quite good. And like I said, in this year, the international business has grown by 30%. And in the next year, which is FY27, we are expecting, apart from defense, domestic and international both should do very good. So as far as new territories are concerned, mainly we are focusing on African continent, and that's the market where we are expanding every year. So like I have explained in my previous calls, we have created South Africa as one of the hubs for our future expansions, and we have already set up the facilities apart from South Africa in Zambia, Tanzania, and we have also started Zimbabwe facility. And in the West Africa, we have a Nigeria as a base, and from there we have started our operations in Ghana, and in this year we are expecting to start operation in Sierra Leone. And in Turkey, we have a strong base, and we have started Kazakhstan plant. So similarly, we are trying to expand in all those markets, which helps us to utilize the facilities which we have set up in these major markets. And as far as Southeast Asia is concerned, we have a small facility at Thailand and Indonesia. Australia is also going to start very soon.
Great, sir. Very clear. The second question is essentially on defense. Now, defense guidance is very, very robust after a very good quarter. Now, a couple of clarifications or, little bit more color that I would request from you in this regard. So one is about Bhargavastra. The counter drone systems have been in flavor, for some time now. So just wanted to get an understanding where we are on that front, if any tests are pending, and when can we expect the order. Similarly, the progress on 155 shells, where we are with respect to tests and other necessary certifications.
So normally we would like to avoid all such product-specific questions due to variety of reasons. But Bhargavas is a strategic item for us, and we are developing this product from last couple of years. And this product will be one of the very few companies in the world who will be developing such kind of system. So the product development is in a final stage, but still such kind of product development takes longer time than what we expect. But definitely we should be able to complete all the trials in this calendar year. So this is the status of Bhargavas, and as far as 155 products are concerned, we have already started supplying all the raw material intermediates going into this product. Our propelling facility, which will help us to produce the complete 155 product, we should be able to finish in next couple of quarters. But definitely it will take another 3 to 4 months time, and then we will start supplying the complete round of 155.
Very comforting, sir. Thank you so much, and all the best.
Thank you.
The next question comes from the line of Umesh Raut with Nomura India. Please go ahead.
Yeah, hello sir, good evening, and congratulations for a very good set of numbers. So my first question is pertaining to our exports business. If I look at our historical trajectory, I think we have seen a stronger growth in between FY19 to 23, when our business actually grew by almost 3.5x in terms of top line. Then we had almost more of flattish growth between 23 to 25. And again, I think it looks like with 32% kind of a growth in 26, growth is looking very stronger on the export side. So I just want to understand how big this opportunity is, probably 2-3 years down the line. Again, can we expect closer to 2-3x kind of jump in terms of top line for our export business? And to achieve these kind of growth opportunities, what kind of investment that we can expect from you in terms of medium term, both on capacity expansion as well as on client traction side?
Yeah, thank you very much. Yeah, you are right that if you look at 2015 number, the export and overseas was around 400 crores, and that has reached to almost 800 crores. And there we hover around for almost 3 to 4 years, right from 2021 to almost 2018 till 21. We were in that range of 800 crores. And after that, it started picking up. So the point was that during that period, we were setting up the greenfield facilities, qualifying ourselves into the overall mining procurement system. So that was the key period. And after that, the sales from our exports and overseas has started picking up, especially from 2022. So that was the year when it has reached to 1,400 crores, and now it has crossed almost 3,800 crores. And next year also we are expecting a growth of around 30%. So we believe that there are plenty of opportunities for us in the international market, but it will be very difficult for us to give any trajectory, specifically in numbers of how much multiple we can grow, or how much times we can grow from this base. But I feel that since international markets are growing at 2 to 3%, but we expect that the volume terms we should be able to grow comfortably at around 10%, and in value terms we should do at around 15%. But this year, definitely because of the rise in commodity prices, will help us to have more top line. So that's why we are bullish, and for the next year, we are expecting a growth of around 30%.
Got it, sir. So just one clarification, if you can give us some understanding about market share that you have in key markets in export region.
As of now, we don't have that kind of visibility.
Okay. Sir, my second question is, if I exclude your target growth on exports and defense side, domestic looks like is expected to see about 35% kind of growth for 27, which is more of an implied growth from your guidance. So, is it on the account of purely low base where 26 was also impacted here from the monsoon? And apart from that, probably higher traction on infra and coal volume side that you are expecting in 27?
Yeah. So for the next year, like we have mentioned that we are targeting 14,000 crore revenue. And if you take the defense out of that total number, then it is around 9,500. And like I said, domestic and international combined together, we should be able to grow plus 30%. So out of this 32% or 33% growth, we expect that 10 to 15% should come from volume growth, and around 20%, 18 to 20% should come from the price rise. So that is mainly because of the impact of the higher crude or gas prices on the upstream products or downstream lines. As far as the demand, the domestic market is concerned, last year it was a totally flat growth market, or you can say the removal in Coal India, Singareni and private coal mines combined together was on a negative side. But despite of that, we managed a decent growth of around 4% in value terms. And this year we expect that because of the pressure in the market where people would like to shift from the diesel, petrol or generated products to the electricity-based products. So that will definitely help the growth in the coal mining sector. And since last year was the bottom out kind of situation for OB removal section, so this year we expect the demand should pick up.
Understood. So my last question on the competition side, we are hearing about probable entry of Kalyani Group into explosive business. So any kind of thought process here? Do you see incremental competition because of this? And especially if you look at, I think, defense, because they were already present in this business in form of guns and missiles, probably. Any kind of color over here in terms of competitive intensity you are seeing increasing in the domestic market?
So the first point is definitely I would not like to comment on the competition side or competitive, but it's a matter of fact that solar has risen its base from 1996, where it was a small player in the whole explosive market. And we have competed with the world number one, number two in the markets, and we have increased our presence. So from competition side, we are not afraid from anyone, but market opportunities are immense where everybody will have its own pie. We cannot say that we will have 100% market share, and that is not our target also. And the way we are expanding, it is not the only product which we are working into. We are not a hardware company also. We are developing energetic products. We are expanding our technology footprints and going to offer many advanced technology solutions for the border security.
Understood, sir. Thank you. Thank you so much for these answers and all the very best.
Thank you.
The next question comes from the line of Vikas Singh from ICICI Securities. Please go ahead.
Good evening, sir. Thank you for the opportunity and congratulations on a very good set of numbers despite challenges. So my first question pertains to, since our defense mix is improving in the overall sales, while we are still giving the guidance, margin guidance kind of intact versus last year. So is it some of the item where the cost inflation pass on would be difficult and that's why overall margin are same, or we traditionally doing a conservative estimate at this point of time?
So as far as EBITDA margins are concerned, you are aware that prices of all the commodities has gone up, and definitely passing on the same increase sometime is difficult. But we have increased the prices, and there are rise and fall calculations already in place in our contracts. So that will take care of the actual price rise. But if you look into the overall EBITDA margin, definitely there will be some little bit impact. But since our defense is picking up, international is also doing very good. So we should be able to maintain the current EBITDA margins.
Noted, sir. So my second question pertains to the domestic explosive market. Obviously, we have added a lot of capacities and eyeing a market share gain. Is it basically through the new products because segments remain the same or the user industries are limited in a way and none of them are growing at 10 or 12%. So just wanted to understand this market share gain strategy, how we are actually targeting that.
So it is not a straightaway market gaining strategy. Over last, say, 10, 12 years, we were expanding our facilities at our core plant, which is at Nagpur, which makes package explosives and initiating systems. But as we have become a global player, so capacity utilization level has gone up. At the same time, if you look into the logistic cost which comes on the explosives, it is a wise step for us to expand outside Nagpur. That's why we have acquired a company in northern part of India. At the same time, we have just almost finished the mega expansion in western part of India. And similarly, we are going to expand our base in Orissa and Telangana markets, Andhra Pradesh. So this is a key reason. Second is, as you are near to the customer, definitely gaining or servicing the customer is always better, and that helps us to grow or grab the market growth in those markets. So that's the key point.
Noted, sir. So just one last question. In terms of this quarter, had we had any inventory gains in our overall numbers, or it's the natural kind of the margin which we were expecting?
So definitely, whenever prices goes up, we have inventories. Like in this quarter, our inventory was more than what we normally carry due to variety of reasons. And definitely, we will have inventory gain in the coming quarter. But at the same time, this is very normal for our kind of industry. And since price goes up by, say, example, $200, but you will get only the price escalation based only for, say, 60% of the total increase. So that will take care of only the price increase. But there are certain contracts where we can pass on after a quarter. So those kind of situation we can easily absorb with having such kind of inventory level. So definitely we are in a very good position to absorb these kind of shocks.
Noted, sir. And sir, next year CapEx, if we can split between defense versus non-defense explosives, that's 2,000 crore plus CapEx.
Like we always say that for us, our business is one. And next year we are going to invest around 2,050 crores. And we always channelize the CapEx programs based on the priority and the market opportunity available to us.
Noted, sir. Thank you and all the best for the future, sir. Thank you.
Thank you. The next question comes from the line of Dipen Vakil with Phillip Capital. Please go ahead.
Thank you for this opportunity and congratulations on a great execution. So my first question is, sir, can you help us with the order book breakup between defense and non-defense for the 21,300 crore order book? And what are the major orders which we can expect in near future? Any highlight on that?
Yeah, out of the total 21,000 crores of order book, defense is around 18,000 crores and non-defense is around 3,000 crores. And out of this total defense 18,000 crores order book, mainly the biggest order was from Pinaka, and rest all are small raw material and intermediate goods for the Indian markets. And we have also received plenty of orders from the international markets. And as far as new orders are coming, yes, we are in a final stages of receiving orders for the similar products. And we are also expecting orders from Pinaka series of products that is in the discussion stage. We are in negotiation, but that takes time.
Got it, sir. So my second question is, I want to understand the new product and development which are happening at Solar. So considering that a lot of so can you help us understand which are the new products which are on the advanced stages of finalization in terms of development and can come into your product portfolio soon, and which are in the early stages?
So like I said, it is not wise on our part to share the program-wise progress and status. But definitely the products on which we are working very closely and which are in the final stages is one of them is a Bhargavas, which is a counter drone product. There are multiple options within the loitering ammunition. Those are also in the pipeline. Apart from these two, like I said, 155 mm complete round of ammunition that is also in a last stage of complete trials. So once we have finished, like I said, we have already started making the propellants for these products, which is large caliber ammunition. Now we are going to make a complete round and supply for the qualification. So these are the key products, apart from many others which are in the design and development parts, and that is not good on us to explain the exact status for each product. You can also, since the RDO is developing many of the products, and we are also partnered to those programs, but these programs takes time, and we will definitely share the progress on key milestones.
Got it, sir. So last small follow-up, sir, you had like medium caliber ammunition facility you had recently commissioned. So is it operational now, or we are still awaiting some certification or something? So can you share an update on that?
That is already commissioned, and we are starting supplying the products for qualification. And once we qualify, we will definitely receive orders for those products.
Got it, sir. That's all from my side. Thank you so much, and all the very best for FY27, sir.
Thank you.
The next question comes from the line of Bharat Shah with BCS Capital Ideas. Please go ahead.
Yeah, hi Manish. Hearty congratulations. Once again, really standard defining performance. Hearty congratulations to you and the team.
Thank you very much, sir.
Lot of pleasure. I over a dozen odd years that I've known you in a very quiet and unassuming way, from virtually a limited product and limited geography, we have built a business which is multi-sector, multi-geography, multi-products, and made it brick by brick a very resilient and strong business. So great credit to the way the business has been built over a period of time. I remember 10 years back when defense business seeds were being laid and there was nothing on horizon, and how painstakingly efforts have been put to build the business where it is today. So clearly, kudos to you and the entire Solar team. Just two questions. Last year, if you see the financial year 25-26, working capital is sucked away almost about 1,600 crores. And in the year prior to that, working capital actually released about 800 crores. So from the cash flow, operational cash flow, almost a swing of 2,400 crores is being sucked away from the operational cash flow in the 25-26. Any comments on that?
First of all, thank you very much, Bharat Bhai, for your kind appreciation. And definitely, in fact, it's a responsibility of every citizen and every company to work towards our national security and contribute for the country's prosperity and progress. So thank you very much, sir. And as far as your working capital question, Shalini will respond to that. Just a minute.
Hello. Good evening, sir.
Yeah, good evening.
Yes. Sir, the working capital days had been, in this year, it had been hovering around 90 to 100 days till quarter 3. But in quarter 4, so the working capital days have been increased primarily due to high inventory levels. They were mainly done to build them and mitigate the risk arising from geopolitical uncertainties. And to address the uncertainties and maintaining supply chain continuity had been critical. And as Manishi had answered in the last call, so obviously these inventory levels will help us going forward, so as to it won't disturb the revenues going ahead, as well as the same will help in generating the margins. And
as sorry, please go ahead.
Yeah, as the geopolitical situation stabilizes, we anticipate normalization in the working capital limits over time, maybe in next 2 quarters.
Sure. So this was a deliberate and strategic decision. It is not accidental.
Yes, sir. Correct.
Right. And second, if I see contribution of subsidiaries to the earnings, consolidated bottom line, I'm a bit intrigued by that. If you see our consolidated earnings for last year, has been about 185 rupees compared to 134 last year, year 25, of which subsidiaries have contributed 50 rupees in the current year compared to 45 in the year preceding. So subsidiaries have barely added to the consolidated bottom line, which considering our export and international presence, I'm a bit surprised at how subsidiaries have made relatively more muted contribution. Of course, in the fourth quarter, it is dramatically improved, where 11 rupees had come contribution of subsidiaries to the fourth quarter result last year, which has shot up to 19 rupees in the current year. But year in the entirety, 45 rupees earnings to 50 rupee earnings of the subsidiaries, I'm a bit surprised by that.
So, sir, in the first half of this year, since the defense business, because defense, our solar defense is a subsidiary of Solar Industries, and our international business are also subsidiaries. So if you look at the total results, definitely in the first 6 months, the results from the defense section as well as the international, as far as margins are concerned, were subdued. And it started improving from Q3, and in Q4, those have started giving very good results. So that's the key factor. And now onwards, we believe that the subsidy level, whether it is in India or overseas, all will start delivering very good performance. And that's why, despite of a very high base of raw material prices, which we are expecting in the coming financial year, we are pretty confident that we should be able to achieve the current levels of EBITDA margins. If you look at the 3-4 years back period, when the raw material prices has increased by 50, 60, 70%, at those times our EBITDA margins went down by around 2 to 3%. So this time we are confident that we should be able to manage this situation with the help of improved defense as well as international business.
Sure. No, understood. Which means basically volatile currencies and volatile geographies must have taken away some part of the earnings, I suppose, in the last year.
Yes.
And that you expect it to be reversed, right?
Absolutely, sir. That is the situation in all these markets. Sometimes there is a lack of payment, sometimes you have to buy at a higher price. But frankly speaking, all such kind of uncertainties, and if you handle it well, converts into an opportunity. And we like all these things. So in nutshell, sir, overall as a business, if you are able to achieve around 27-28% of EBITDA margin, despite of all the current crisis, is all because of the efforts which we have taken on all the fronts.
Absolutely. The record is there to show it fully what you are saying. So remarkable one. And once again, hearty congratulations.
Thank you, sir.
The next question comes from the line of Sanjeev Zarbade with Antique Stock Broking. Please go ahead.
Yeah, sir. Thanks for taking my question. Sir, our exports business has remained largely flattish on a sequential basis. So are you seeing any headwinds on account of the developments in the West Asia regarding freight and, logistics, and would it impact similar, growth in Q1?
Yeah, in the Q4, the revenue from international is around 1,000, and last quarter also it was in a similar range. So we expect improved performance even more than these levels in the coming quarter.
And sir, my second question was regarding the impact of the commodity prices, and of course we have taken some price increases. So, and I think from our past interactions, I think the benefit of price increase comes with the lag. So is it possible that we might see some impact on margins in Q1, and then maybe in Q2 there could be some recoup of the margins?
So we run business as a whole, and we don't look on quarter-to-quarter basis. So what guidance we have given, we are pretty optimistic that we should be able to achieve that.
And sir, thirdly, because of the increase in prices of ammonium nitrate, would there be any demand impact in the sense that buyers might wait for some time to prices to cool off and then start buying the high energetic material?
It is too early to comment on this because the impact of very high prices of commodities killing the demand. We need to wait for some more time, get the clarity and the response of the people who are going to consume these products. But by and large, we do feel that there can be a demand contraction for some couple of months. But by and large, on an annual basis, I don't see that.
Okay, sir. Thanks, and great, and congratulations on great set of numbers.
Thank you.
Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for the closing remarks.
Hello. Yeah, we thank Motilal and Chorus Call for the call, and all the investors at Nifty for taking the call. Thank you.
Thank you, ma'am. Ladies and gentlemen, on behalf of Motilal Oswal Financial Services Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.